For all your real estate, financing, and investing questions, call the show's off-air number and speak with Mike Gray directly. 530-431-8586. That's 530-431-8586. Now, the Golden State Report with Mike, Amy, and Dave.
Welcome back, everybody. You are listening to the Golden State Report, heard every week on AM 1380. I'm Mike Gray with Morris Williams Realty, along with David Stone from the Stone Consulting Group.
Happy holidays, everybody.
And the wonderful Amy Debusk from American Pacific Mortgage.
Oh, so happy to be here with you all.
Amazing
my co-host.
Amy.
Yeah, and happy holidays to all of our visitors, listeners out there. So Amy, I shared what I thought, kind of a little recap of what happened in 2023 and what I see happening in 2024. And really the one driving force besides our inventory in the Sacramento Valley has been the interest rates. So you are really the key here, okay? Putting a lot of pressure on you. How is our market going to be? Well, it's all going to depend upon what Amy says right now.
There's a lot of real estate agents out there just waiting to hear your words of wisdom.
And you are a resident expert here. So okay.
Yeah, I don't know if it's wisdom, but definitely what my hunch is. And I listen to our analysts on a daily basis, and they've given us some predictions for what they see in the coming year.
Okay,
but let's step back and let's talk about 2023. So in third quarter, interest rates reached almost 9%. Mm-hmm. So I was quoting 8.625, and that was costing a point. Mm-hmm. And that was in third quarter.
Now, a point is what?
So that's a great question. So a point means discount point, or 1 point is the cost associated with the interest rate. So if you have a $400,000 loan amount, the discount point or the points are going to be a percentage of the loan amount. So if it's $400,000 on your loan amount and you're being charged 1 point, that's $4,000.
So an $800,000 loan would be $8,000.
$8,000, correct.
So 1 point basically is 1% of the loan amount.
Correct, one discount point. So that's what I was quoting in third quarter. And, drastically, within 2 months, our interest rates are now in the sixes. Mm-hmm. So high sixes, if you want to pay a point, mm-hmm. And this is all dependent on, loan program, your credit score, how much money you have down. There's different interest rates associated for all the different programs out there. So
correct.
The FHA loan is typically, the interest rates are lower. However, they have private mortgage insurance on the FHA loan that makes it a more expensive loan.
What about the actual credit score? So tell us, when somebody hits a certain credit score where they're at the A paper loan, best rate, versus, kind of what that might ratchet down to somebody in the lower level. So what should people be looking for in terms of their credit score that they're trying to shoot for?
Well, in 2023, we didn't talk about this a lot on the show, but in 2023, Fannie Mae and Freddie Mac, they changed the rules when it came to credit scores and it's called a loan level adjustment price for each interest rate that they charge to all the banks, and then the banks pass it on to the client. And so they changed the credit scoring system for how much they're charging. Mm-hmm. It used to be really cut and dry. You never got a better rate if your credit score was higher than 740. Well, they're rewarding good behavior, for lack of a better explanation. If you have an 800 credit score, you're going to get a lot better of an interest rate than somebody who has a 740 credit score right now.
Even from 800 to 740, you're seeing that?
Oh, yes. So there's breaking points, 740, 760, 780, and 800.
Interesting.
What's the highest credit score?
800.
800 is the kind of... You can't get an 810 or an 820?
They're only going up to 800.
Okay.
Thank goodness.
Shoot, I thought I had an 841. I must not have.
I
thought I had an 850 something.
You have an 875.
On a scale of 1 to 10, I'm an 11.
That's right.
Oh boy.
So this is digressing, guys.
Oh, what else is
we
new?
we always do. Okay.
What else is new? It's your segment. We're just railroading
Usually
it.
we digress in my segment. All right. So I'm really happy. Okay.
So let's talk about what if your interest rate is lower than 700? Maybe you're 650, 660, 670. The pricing, it costs more than it used to.
Correct.
So
Okay.
they're penalizing for people that don't have as good of credit.
Wow.
So we saw interest rates rise to a height in October of 2023 to 8.5, to a little bit higher than that. And they've come down the last couple of months, which has made big news nationally. So, Amy, 2024, right around the corner, all right?
So I want to preface this with, I am the eternal optimist.
Yes, you are.
Okay.
So I think that interest rates will hit. I mean, this is what our analysts are saying as well. This is not just me. So by May of 2024, we will see lower interest rates. And I would say that they would be in the fives by May of next year.
Fives.
So-
Yep. So I don't know if it's going to be high fives, mid fives, but I would say fives. So under 6%, maybe between 5.5% and 6%.
If that happens by May of 2024, you are going to see buyers come out of the woodwork.
Yeah.
From your lips to God's ears.
Yep.
right.
And sellers are going to be in the driver's seat for all the negotiations, and you're going to see pretty significant bidding wars, which of course will lead directly to some very nice appreciation for the value of the homes. Mm-hmm. Interest rates, we won't have enough inventory. I don't care, if interest rates fell to 2%, we're not going to have enough inventory. There are still going to be some sellers who are going to hang on to their existing mortgages because their interest rate is 2.5%. So our inventory is going to be limited, but the buyers are going to say, wow, it was 8.5, now it's 5 3/4. I need to jump on the bandwagon. And if that happens, we're going to see quite a bit of competition for any existing home on the market.
I will also say this. I think we're going to see more sellers come to the market because, if they can sell their house for more money and maybe they do have to take a higher interest rate, 5.5%, 6%, they're going to be able to put more money down on that new house, which will compensate for the higher interest rate they're going to experience.
And mentally, it'll be an easier blow to accept. Hey, interest rates were again 8.5. Now they're 5 3/4. Yeah, I can live with that. Okay, and they'll walk away from a mortgage of 3.5% just because they, as you said, they can get such a great price on the home, and they maybe need to downsize or upsize or relocation or just for whatever different reason they may have to sell. Yeah, it may increase the inventory, but they're still not going to keep pace with the number of buyers.
Right. So now I will say this: if our economy, gets worse, meaning that
Well, you said earlier, just to make sure, you said earlier that you feel like we're already in a recession.
I do.
But it just hasn't, we haven't hit the quarters of GDP being negative.
My industry has been in a recession for the last 18 months.
Yeah, because of the rates.
Absolutely,
right?
absolutely. And there's an old saying, the housing market is always the first into a recession and the first out. Mm-hmm. So I'm just from what I'm seeing around, just what I'm feeling, I do think that we are already in a recession. Now, if that's true or not, and if the Federal Reserve Board actually acknowledges it and they start to decrease the Fed funds rate, then I could see where maybe they would lower interest rates to a point where maybe we'll be in the 4s by 2025 or the end of 2024. I mean,
did I hear cheers from the audience?
Fours.
You didn't hear anything from me because you took my breath away.
I think I heard some like music and like it was like Halloween.
No, I heard the
Christmas.
I heard the Hallelujah chorus in the background. Okay?
There you go.
If I would have a button, I would have pushed that button.
Oh yeah,
right?
that would have been great.
Well, the Federal Reserve Board only has a few buttons to push to be able to manipulate the economy, right? And so, the 10-year Treasury, the 30, the Fed funds rate, all those things,
right?
That's their biggest button to push to make things better. right?
Well, they've been pushing
Or
that button a
worse.
lot since April of 2022.
How many? How many times did they do it?
I can't keep up.
I think it's like 10 or 11.
Yeah.
So they raised the Fed funds rate 11 times since April of 2022.
Right.
So your projection for 2024, what's the average interest rate going to be?
5.5.
5.5. That would be really encouraging news for the Sacramento real estate market. So not so much for buyers, even though they think it's good news. I think they're going to see there's going to be substantially more competition. You have any questions about buying or selling, about what your interest rate should be, could be, or might be, give Amy a call. That number is 530-431-8586. Again, 530-431-8586. We'll be right back after this break.
Red roses too. I watched